What's up, YouTube? Welcome back to the channel, and thank you so much for jumping into another video. I'm just going to get right to it. It is Friday night, October 10th, 7:21 p.m. We are waiting for the market to officially close at 8 p.m. for the weekend, and man, let me tell you, we need it. We need to all just take a deep breath and relax. I had to actually take some time after the market closed at 4 o'clock today to just completely kind of step away from the numbers, step away from the market, put my phone down, close my computer, walk away from it for a little while, only to come back to look at it later and realize that the market is still doing what it did through most of the day, and that is a significant pullback. But here's what I want to share with you. I want to tell you, AJDT family, subscribers, those of you that are here for the first time visiting the channel, take a deep breath and just be calm, okay? Because what's happening right now is actually something that has two parts. You're either in category A, which is you're already in stocks and you're watching them literally plummet, and I use that word dramatically, or retest, come back, pull back, whatever those words are that you want to use, or you're in category B, category 2, which are those that have powder on the sidelines and have been waiting for an opportunity such as this. Which one are you in? Because I'm a mix of both. I have an entire portfolio of stocks that are red, that are down, that if I had not had the experience or been through some of this before, I potentially would be right now watching the market, making decisions, poor decisions, bad decisions, selling off everything at a loss and thinking that potentially I could lose everything. Now, I cannot guarantee or cannot tell you, number one, it's not financial advice, so you have to make decisions that are right for you. I cannot tell you that the market's not going to continue on this downtrend. It 100% probably Monday is going to be a red Monday. It's going to be a red day. And it doesn't help that the bond market's closed. The banking system's going to be a little bit slower. So potentially the market could continue after it closes 8 o'clock tonight at 8 p.m. Sunday when we do our gap up, gap down video, which I would love to get it back to a live video. And it may be a live video. I don't know if we'll have many people there because I haven't been able to advertise a live video for Sunday. And we're still working through programming to make sure that it works properly. But I'm going to be watching to see what the S&P 500 does on Sunday night at 8 p.m. Does it gap up? Does it gap down? My guess is, from a theoretical standpoint, that it's a gap down and we continue to see some red. What do you do right now? What do you do right now? My personal opinion is you don't act out of fear. You don't act out of panic. You don't sell it off the farm because you're panicking. My theory and idea right now is that there are things happening in the market that are not technical. They're not, based on charts. They are emotional. This is an emotional based situation, what the market did today. And exactly what's going on in the market today is because of one thing that happened, and it was Donald Trump tweeting about tariffs in China. That caused this entire market to run down. The S&P 500 had one of its most significant drops since April 2nd, which was Liberation Day. And why is that? Because people are freaking out about all of the companies, the products, the things that are going on and happening between the United States and China. And we've already seen how many times, it's like we got into the market a period of time long enough that we had tweets come out about tariffs and China and all these things. And then a day, 2 days, a week later, we hear the, never mind, we're going to postpone that idea. We're going to cancel that idea. Okay. And what ends up happening is that it played out long enough that the people who are super wealthy, okay, the 1%ers, basically now come in and buy everything that we sold off in a panic. They buy everything at the bottom. You've got stocks, companies right now that are at a dip that is an incredible opportunity for us to buy. Now, here's what I'm going to ask you all to do. Instead of panicking, and take that deep breath. Look at the market sectors. Okay, I actually threw some things together here on my computer so that I could share with you a few ideas. And I'm going to throw a few ideas at you because whenever there's a specific major type of pullback like this, and you know that the S&P 500 and everything has been running at all-time highs. Matter of fact, the NASDAQ today hit its all-time high right before the bottom was pulled out. So here's what I'm going to tell you to take a look at. I'm not going to go over charts. We're not going to go over results today, all right, because you already know most of what's happened in the results and in the market. I'm down about, I don't know, $7,000, $8,000 just today, okay, in my trading account, my play money account. Here's what I need you to do. I need you to go look at the different sectors that are out there, because while there's panic selling and people pulling out, money doesn't typically leave the market. Money moves around the market. You have, where money is moving between the sectors. So I've said this before, in a pullback, in a retest, you need to go to the sectors, the areas of the stock market that react positively to a pullback. Okay. One of the guys in the Discord texted me immediately and said, Josh, are you still in MP? Are you still in the company MP, the stock ticker MP? And I said, no, I sold it at what was a high for me, $79 the other day, took profit, moved on to something else. Well, it hit $84, $85, $89 today and that was during the pullback, during the drop, because materials like energy and utilities, okay, consumer staples, those are the ones that run up while everything else is running down. This is a basic, typical scenario, and let me show this to you. I'm going to show it to you in the charts. When we look at Tesla, I shared with you that, okay, here's the S&P 500 right now. And look, even in the post-market, and I said I wasn't going to go to charts, but we're in it. We're pulling back up. It's turned and rotating back up. Now, that doesn't mean it's going to not turn and head back down, but you can see everybody right here at the end of the trading day, right? My trading day doesn't end at 4 p.m. My trading day ends at 7:59 p.m. when the market closes at 8 p.m. for a Friday night. Well, look, clearly people have the same idea, because look what's happening with the S&P 500. Look at this monster engulfing candle, okay? And I'm in the 15 minutes, like I always tell you. 646.90 to a high of 650.75, and it continued up, and then it sold back off a little bit, and then it continued with 3 new green candles, and that's where we are right now. 646.20 was the bottom of this right here in the post market. We're at 651.17. Now that's the S&P 500. But Tesla as the example, look at Tesla. Look at the major sell-off with the S&P 500 today, hit $400.68. And now people are like, man, my time to get some money into Tesla, all right? And it went all the way up to $413.39. It's at 409 right now, and it's bouncing hard. Tesla always moves fast. But look what's happening. TSLR runs down with it. TSLT runs down with it. TSLL runs down with it. But all day long with this drop, what did I get into? What did I do? I bought TSLQ. Now, maybe it's not as big a price tag, okay? But TSLQ, before this whole, when this drop started, was at $7.90. And it ran all the way up to $9.43. And it has pulled back in the market going up. Look, okay, here we go. Tesla going up in these big candles. TSLQ coming down on those big candles. Then it turned to go back down on the Tesla main, it going back up. Okay, now it's pulling back a little bit, but you could have made money here, and in TSLS, made money here. $5.36, $5.90. I play them both. I am not prejudiced to either one of those. When Tesla's running hard down, I'm running up in these two. Okay, just an example. What you have to do is you have to go to the different sectors and find where is the money moving around to. Now this is nasty. Look at this. S&P 500 down 2.7%. 2.71%. A lot of people that I follow, that I watch, are saying we should see potentially at least a 6% pullback. Okay, we're only at 2.71% in the S&P 500, 0.20, oh, now it's 1.9%. Look at that, 1.9 in the Dow, 3.56 in the NASDAQ. Okay, even China, they're down too. Their markets are down, but you have to find the sectors that are going to make you money. So let's go back into let me share with you a little bit about what to look at. All right, there's a lot of safe plays during a drop like this. The defensive sectors, okay, utilities. XLU is a major utility sector, like an ETF type of a fund. Electric, water, and gas companies. Those are essential. They're not going anywhere. They rarely crash as hard as, say, a tech, AI, computer chip based type market or sector. All right, consumer staples, the XLP. All right, think about food, think about beverage, household goods, right? Coca-Cola, Procter & Gamble, Walmart, Pepsi just had amazing earnings results, right? People still buy those no matter what. You got to eat. You got to have those types of staples, all right, that they need. So look at that. Look at those. Healthcare, never does it die with an AI type tech type market drop pullback. S&P 500. Healthcare, the big pharma companies, medical devices, all right, those companies usually stay pretty stable because their demand is constant. So there's a strategy for those. When you need to preserve, these are the capital preservation zones. You're going to want to look for oversold conditions and grab short-term rebounds, or rotate into them early when the volatility spikes. Well, we're already there, right? The volatility's already hit hard. What happens on Monday, though? Start to take a look and see where you're moving your money or putting your money in. Now, during the panic, right now, everybody's panicking right now, okay? Monday morning, everybody thinks the market's going to continue to crash. So these are volatility and fear trades. You've got to look at VIX-related ETFs. You want to look at the tickers, VIXY, UVXY. Gold. Now, we know that gold was on a high run, and then it came down, it pulled down. I'm not sure where gold is right now. I haven't looked at it, but gold and precious metals, GLD, GDX, those are ones you want to take a look at. Those are basic classic fear hedge type strategies. And the treasuries, TLT and IEF. I actually just had some calls on TLT, and I literally this morning just got out of them and sold out of them. I probably should have left them because now they're probably banking. They're probably printing, but I got out. Money typically rotates into the treasuries ones, but remember Monday, the bond market and all that is closed because of the holiday. So you also have to look at the high beta tech and growths. This is when the bounce plays after the drop. So a lot of people are saying it's a dead cat bounce, meaning that the cat has hit the bottom, it's leveled out, and now all the wealthy people come in, they scoop it all up, and they're making all your money. They're taking all your money. Don't sit on the sideline for that. Make sure you're in that. Make sure you are part of that dead cat bounce and get that money. Get those stocks while you can. Energy and commodities, okay? Sometimes it's when the pullback's economic, but it's inflation driven, so not as much here, but definitely energy. Oil stocks like XOM, CVX, those surge if supply fears return. And we're not there at those, but different commodities also, DCB, DBA, those are broader plays on inflation and resource scarcity. We're in a government shutdown too. Remember, you've got to play everything into account for what's going on. We're now not going to pay people that aren't working in the government, right? Trump said that. He's withholding pay. We have basically this news about China and the tariffs. And you have to understand that we now have a full weekend to go through to see what kind of tweets are going to come out, what kind of information in social media is going to come out that potentially could affect Monday as well. So be super careful. Go on your TradingView account, go on FinViz, all right? Look at Webull, look at your Moomoo account, look at your, all the different places you can go to see where money's rotating and moving through the different sectors, all right? So the other thing you should be looking at right now is crypto. Are you in crypto? I'm in crypto. XRP, Ethereum, Bitcoin, Solana, okay? These are plays that potentially when a market is pulling back hard, people are looking to put some money. Look at crypto stocks. See what's going on with the crypto stuff. And you have to do a lot of homework and due diligence. Don't just start throwing money into different places. You've got to know where you're putting your money and be very careful. It was a red day today. There's no way to get around that. I see live YouTube videos going on right now of people, telling you be careful, warning you doomsday, all that. I see live videos of saying buy the dips, perfect opportunity to buy. I tend to fall more to the latter. Great buying opportunity once we get past the dip. It's understanding where the dip actually ends. Do I think it was today at the end of this market and that little bit I showed you in the S&P 500, or even Tesla pulling back up? No, I don't. I think you have a lot of people that are buying back in to take profit right now, and they're like, hey, I got an hour left in the market. Let's run some of this up and see if we can make some money. And they did. They made some money tonight. All right. But blood is in the streets. It's time to eat. Thank you. That's a Chris saying. I give the credit to where it goes. Chris saying, blood is in the streets. It's time to eat. Be careful. Manage yourself well. Know your risk tolerance. Don't go running and grabbing a bunch of money and just throwing it in the market for nothing. Don't use your money you need to pay your house bills, your electric bill, your water bill, to put food on the table to feed you and your family. You've got to use money that you already have set aside that is just for this. Be careful. Be cautious. We can continue to get rich together. If it's your first time being here, hit that subscribe button, hit that like button, hit that notification bell, and join our YouTube community, the AJDT family, so that you are getting more information than just in the YouTube videos. And if you're join the elite group, then you become part of the Discord, which is literally brand new. We are growing it from the bottom up, and we are hoping to see that this thing explodes. Go in the description. I've got my email address there. You can email me after you join the elite group. And get that set up, and then we send you the invite so you can be part of the Discord and work with and be with a bunch of other individuals just like you, just like me, that just want to work off each other, make money together, hear what trades people are getting in and out of, sharing the news live time, and being in that Discord together. And it's been awesome. We have a great group of individuals that are already in there willing to help and participate and give advice. We've got an options channel. We've got a day trade channel. We have a channel where you can post your plays, getting in and getting out, etc. And I typically will give some advice based on what I'm seeing and what am I doing in the market, usually in the morning. So anyway, that's it. Hope you have a wonderful weekend. Don't stress. We know this market will turn around, and that those that are patient and those that wait will make the money that they will make by being smart, playing smart, trading smart. Josh out. God bless you. Peace.